Hello and welcome back to the Property Pod, your go-to listen for what's happening across the UK property and mortgage world. As always, this episode is proudly sponsored by the Finance Family, a growing financial services business that believes financial advice should be simple, clear, and customer-focused. No jargon, no waffle, just proper, down-to-earth guidance. Now, this week we're diving into something that doesn't always grab headlines, but has a huge impact on how the mortgage market actually functions: regulation and market structure. I know, it doesn't sound as exciting as house prices or base rates, but bear with me. This stuff shapes the very foundations of how lenders operate, how brokers advise, and ultimately, what kind of deals customers can access. Recently, the Prudential Regulation Authority, or PRA, launched a consultation looking at ways to boost competition in the mortgage market, particularly among mid-sized lenders. The goal is to make it easier for well-run firms to compete with the big banks, encouraging innovation, diversity, and, hopefully, better outcomes for borrowers. According to the Bank of England, the PRA is exploring adjustments to the rules that determine how much capital lenders must hold, how they assess risk, and how they report on mortgage products. At the same time, there are wider discussions underway, highlighted by Adelshaw Goddard, around future changes to the mortgage regime itself. Things like affordability assessments, capital frameworks, and risk management. It's all part of an effort to make the market more resilient, but also more competitive, finding that sweet spot between strong regulation and a level playing field. So, what does that actually mean in the real world? For lenders, it could mean change on several fronts. New rules may alter how risk is measured and how much capital must be held against mortgage books. That, in turn, affects pricing, product availability, and appetite for certain types of borrowers. Some lenders might need to adjust their strategy, perhaps diversifying their portfolios or being more selective about the types of lending they take on. The flip side is that smaller or mid-tier players could find it easier to grow, bringing more competition into the market. For brokers, it's a bit of a moving target. Regulatory change means keeping a close eye on which lenders are active, which are tightening criteria, and which are coming into the market. It's also about staying informed, because these structural changes can affect product ranges, affordability models, and even turnaround times. The brokers who thrive in this environment are the ones who keep their ear to the ground and translate complex market shifts into clear, actionable advice for their clients. And for customers, ideally, this should mean more competition and better choice. A healthier market means lenders have to work harder for your business, offering sharper pricing, more flexible products, or better service. That said, stronger regulation also tends to mean tighter affordability checks and more detailed assessments. So while the options may increase, the bar to qualify could rise slightly too. It's a double-edged sword, but one that ultimately aims to keep the system stable and fair. The truth is, regulation often moves quietly in the background, but it sets the pace for everything else. It determines how risk is priced, how competition evolves, and how accessible homeownership really is. For lenders and brokers alike, the next year or two could bring some meaningful shifts. Not dramatic, perhaps, but significant enough to influence strategy, operations, and client conversations. And for anyone trying to make sense of it all, whether you're remortgaging, buying, or simply planning ahead, the Finance Family is here to help. Their focus on clear, straightforward advice means you'll always understand your options, even when the rules behind the scenes are changing. That's all for this week's Property Pod. Thanks for joining me as we unpack the moving parts of the mortgage world, from regulation to real-life impact. Until next time, stay informed, stay confident, and remember, even in a shifting market, the right advice makes all the difference.